So to enter any country and any country to enter into the business, there are so many restrictions are there. To avoid the restrictions, to conduct the smooth business, the new policies changed. New policies established. That is Industrial Policy 1991. So new policy system they introduced. So under the new policy system, they started that liberalization. So liberalization means what? So yeah, liberalization means doing the business liberally without any restrictions and without any conditions. So generally, the primary objective of this model want to make the economy of India fastest developing. So to growth of fastest developing economy, so they remove the many conditions, many barriers to enter into the business. Okay. So Indian economy was deep crisis at the time of July 1991 when the foreign currency reserves had plummeted almost 1 billion. The inflation rode annual rate is 17%. So fiscal deficit is to about the 10%. Foreign investors NRIs lost the confidence on Indian economy. The capital flying out the country, we were very close to defaulting the unknowns. So this situation to avoid that, they taken one decision that is liberalization, privatization, and globalization. So, so in this situation, we had we faced that devaluation and disinvestment situations. So devaluation means the first step towards globalization was taken into announcement of devaluation Indian currency by 18 to 19% against the major currencies in international foreign exchanges market. In fact, measure was taken in order to resolve the balance of payment crisis. Disinvestments means what? So withdraw of investment. So to order to make the process of globalization smooth, privatization, liberalization policies. So these are very simple terms to discuss about that. First, we need to discuss about the economic reforms. So economic reforms, they started after 1991. Deregulation of industry policy sector, industrial delicensing system, and opening up the economy foreign competition, liberalization trade, financial sector reforms, reforms relating to the public sector enterprises, abolishment MRTP Act. So because of this, so the following are features of economic reform. So to introducing of these economic reforms, so we started the we created different structures of reforms. So among that all the reforms, very important reforms are liberalization, privatization, and globalization. This collectively known as a LPG. Is it clear? Yes. So this collectively known as a LPG. What is the objectives of Indian economy reforms? So there are few objectives are there. First one is the promote the faster rate growth of the growth rate and to enlargement of the employment potential leading full employment, reduce the incidence of poverty, promote the equity and leading, and reduce the regional disparities, improve the balance of payments. These are the basis of these are the basic objectives of economic reforms in India. So after that, that major steps taken by the 1991 reform, that is fiscal reforms and monetary fiscal sector reforms, reserve requirements, interest rate liberalization, reforms in capital market, industrial policy reforms. So these all are taken over by the government of India after 1991. So what is the meaning of liberalization? Liberalization means what? So this is elimination of government control economic activities known as a liberalization. It is what progressive elimination of government control over the economic activities is known as a liberalization. This liberalization refers to the freedom to the business enterprise from excessive government control and they are given into freedom to make their own decisions regarding the production and consumption, pricing, marketing, borrowing, lending and investment. So previously, if you want to start any business, So there are so many restrictions are given by the government. So as per the guidance and as per the rules of the government, we have to produce, we have to run the business. So after 1991, they changed the reforms. So that is the government control elimination. The progressive elimination of government control is over the economic activities. This is known as a liberalization. So now they hand over the freedom to the entrepreneurs and businessmen, so whatever they want to do, they can do, but they have to follow the policies which are provided by the government of India. So globalization and privatization have been become a busy words in the current economic scenario. The concept of liberalization, globalization, privatization actually close relating to the one to another one. This LPG phenomena was first initiated in Indian economy in 1990s when the Indian economy experienced server crisis. There was a decline country of exports earnings, national incomes and industrial output. The government had seek aid to form of IMS resolve the debt problems. So it means what? This liberalization, globalization, and privatization. These three are very close to each one. Simple. The major aspects of liberalization India were discussed in the detail below. So previously, there is a licensing system is there. To enter the any business activity, you must have the license from the government of India. So some now still we have some rules, but most of the sectors we remove that licensing system. That is called as a abolishing the licensing policies. So new NIP means what? New industrial policy. New industrial policy. They abolished the licensing system. Most of the industries, except six industries. So they include the alcohol, cigarettes, industrial exfoliants, defense products, drugs, pharmaceutical hazards, chemicals. So these are all sectors they removed the licensing system. And liberalization of foreign investments. See, liberalization of foreign investments means to enter FDI into foreign direct investment into country, there is a rules and regulations previously. Now they removed that rules. So they allowed up to 100% of the sum of the sectors. Next, location restriction, relaxation of location restrictions. So there was no requirement of any more obtaining the approval from the government, setting up industry anywhere in the country. So it is compulsory licensing system, population exceeding 1 million. The population industry were located 25 kilometers away of the city. So it established relaxation of location restriction means what? Previously there is a conditions. Now they removed that. Okay. Now, liberalization foreign technology imports. We can adapt the foreign technology. We can import the technology from foreign also. Liberalization of taxation. So, taxation, there is so many changes also there. And phased manufacturing programs. Under the phased manufacturing programs, had to progressively substitute the inputs, components, domestically produced inputs under the local content policy. However, new industrial policy 1991 abolished the phased manufacturing program. Next, public sector reforms. So, greater autonomy was given to the public sector units through the Memorandum of Understanding, restricting of interface of the government officials, allowing their management greater freedom to decision making. So, MRTP Act. See, previously there is an act that is there is an act that is monopolies restrictive Trade Practice Act regulation is there. In the year of 1991, they removed that policy. Then they started the new industrial policies. So these are the some of the factors which are there in the liberalization, the major aspects of liberalization. The measures of liberalization. How can we measure the liberalization? Exemption industries from the licensing. So first, so the government exempted all industries except six. Previously, we discussed already licensing system: alcohol, cigarettes, hazardous, chemical and explosive, electronic, aerospaces. So total how many aerospaces? Any kind of yeah. And defense also it is missing. Defense related products. So except these all, they remove the restrictions from all. So every sector is delicensed. Expansion of industries. Industry free to expand themselves according to their needs, markets. So wherever they want to do the business, wherever they want to establish the plant, they can. So there is no restriction. Freedom to production. How much they want to, they can produce. So previously, as per government direction only, they were producing. Now they remove that, the going away with the concept of MRTP Act. Now, no MRTP Act. So, you can start any business anywhere in India. Extending investment limit of small scale industries and inviting the foreign direct investments. So, these are the measures of the liberalization. Next, forms and impact of liberalization. See, the major sector was impacted during the courses of liberalization. That is, the sectors has been classified into four categories. First one is the industrial sector. Second one is the financial sector. Third one is the tax reforms and fiscal reforms. Fourth one is the foreign exchange reforms or external sector reforms. In industrial sector reforms, what happened? They removed the licensing system, abolished the licensing system. So, except that. Uh, except these six industries, that is liquor, cigarettes, defense equipment, industrial exposure, and danger chemicals, drugs and pharmaceutical, remaining all or anybody can start that. And contraction of public sector. So previously there are public sector 17 units are there. Now they reduced it into 8 only. At presently we have railways, atomic energy, defense only controlled by the public sector area, public sectors only. And de-reservation production areas. The production area was earlier reserved for small scale industries were reserved. This improved land efficiency and developed more cultivation areas across the country. Expansion of production capacity. Next one, freedom to import the capital goods. So any capital goods you require, you have a freedom to import from other country to our country. So these all are the that first case, that is industrial sector reforms. Next one is our financial sector reforms. So financial sector reforms, so they reduce the various ratios. So these ratios are restricted by the central government, which is given by direction by the RBI. Previously, there is a 38% of saturated liquid ratio. Every bank they must maintain as a SLR. Now they can reduce up to 25%. So between these two, they can maintain. And cash reserve ratio 15% to 4%. So maximum money they are not blocking. So they can allowing to spend the much money. Competition from new private banks. They encourage. So previously there is only public sector banks are there. Now they started encouraging our private sector banks also, changing the role of RBI. The Reserve Bank of India become a facilitator. Earlier RBI was regulator, now it is only facilitator. And deregulation interest rates. So banks were allowed to set their interest rate, allow the business commercial borrowings. But saving bank deposits control was with the central government only. The tax reforms, fiscal reforms. Third sector is the factors affecting impacted tax reforms and fiscal reforms. So fiscal reforms policies to set the government taxation, public expenditure policies, all macroeconomic related issued part of fiscal policies designed by the central government. Period policy simplified the structure is their tax rates, targeted to reduce the convenience of the taxpayers. So next, foreign exchange reforms and external reforms, devaluation rupee and other measures. The quota of abolished that, and all imports related issues, various import goods related issues, all export related. So these all are happening that measured impacted in the because of liberalization. And Industrial Policy System 1991. So this industrial policy system is known as the Open Industrial Policy and New Industrial Policy. So what is the features of that new industrial policy? So liberalization of industrial licensing system, welcoming the foreign capital means we are going to invite the foreign direct investment. The facilitate the import and technically known as how the exemption industrial structure, several unnecessary governments. The aim to make the industrial industries more competitive national than the international level, safeguard of interest of workers. So these are the some of the basic points about the industrial system 1991. What is the features of new industrial policy system? So liberalization, liberalized the industrial licensing policy. Liberalized means what? So maximum all the public maximum all the sectors uh, under control by the government only. Previously, it is worked. Now they removed. So some of the only few, only six of the industries, six of the sectors only controlled by the government. Remaining all are all the private parties also entering into the business. And localization of policy based on the area, based on the city, based on the population, they started that given the permissions. And next one is the foreign investment. Foreign investment pre maximum is up to 51% is in foreign investors enter into the Indian companies. So earlier the limit was 40% only. Now at present is some of the sectors like retail sector and industry insurance sector 100% they allowed as per recent stats. Okay, next. And yeah, next one is the workers' participation in management. So, industrial policy emphasis has been laid down the safeguarding of workers' interest provision. The provision has made the workers' participation management in order to manage the security provision has been made the cooperative societies of workers and role of the public sector. So, the role of the public sector is also very important. They are not attending the all the sectors. Only few of the sectors only controlled by the central government. And there is a board for the industrial financial restructuring and other institutions which are fixed by the government. The change of the rule for the MRTP Act. The MRTP Act is nothing but a monopolistic and restrictive trade policy act. So previously it is there, now it is be removed that. So creation of productivity capacity. So capacity promotion of industrial rural areas, foreign technology, adoption of foreign technologies. There is no period information required. Previously, period information is required, now not required. The reservation of small scale industries also they changed. So these all are the features of industrial policy system. Objectives of industrial policy system 1991. So industrial policy system 1991. First of all, this is the new industrial policy. They designed two objectives. First one is the redefinition of concept of self-reliance. Second one is the international competitiveness. So these because of these two causes, they started that industrial policy. These are the two objectives. And other elements also classified public sector reservation, industrial policy delicensing system, liberalization, foreign investment, foreign technology agreement. So dilution of production SSI imposes. So these all are there. The other industries objectives. So go through once. So in this chapter, very important topics are features of new industrial policy system and about the new industrial policy system only you have to learn. Next one is privatization. The privatization means what? Privatization. So privatization means what? Yeah. The privatization means the transfer of management and control ownership from the public sector to private sector. This is referred to as a privatization. The main aim of the private sector is enterprises to earn the profit. There are different names of the privatization in the world, such as a denationalization in England and pre pre-authorization Australia, asset sale program in New Zealand, and disincorporation Mexico, and peopleization Sri Lanka. So in based on different countries, they have the different names. So privatization means what? The ownership or the transfer of control of ownership from public sector to private sector is called as a privatization. So it means what? Here we are going to transfer the ownership from government to private parties. So definition is what? What is the privatization? Privatization includes the widely variety of measures which are considered the rollback of the public sector. So different definitions are there. You can go through once. So here means what? The concept of privatization understood the broad sense include the liberalization and increase the share of the private sector, transfer of ownership. Main aspect of privatization in India, autonomy to public sector. Greater autonomy was granted by in 9 public sector units referred as a Navaratnas, ONGC, HPCL, BPCL, VSNL, BHEL to take their own decisions. And dereservation of public sector. The number of industries are reserved of the public sector were reduced the phased manner from 17 to 18, 17 to 8. Then it is only 3, including railways, atomic energy, specified minerals. This is opened more area for the investment for the private sectors. Disinvestment policies. Till 1999, 2000, disinvestment was basically through the sale of minority shares. But since then, government has undertaken the strategic sale, equity to private sector, hand over the complete of management such as a VSNL, Balco, etc. And features of privatization. First of all, it is a new concept which has been emerged in the last 2 decades. Universal concept. So, wide concept, economic democracy, and process private sector of place of public sector, reduction of state dominance, assumption, new strategy. These are the features. Need for the private sectors. So, what is the need of private sector? So, higher quality management. So, first of all, the any organization, if they want to earn the good profit, the management should be good. If the management is not good, they cannot earn the profit. So, the quality of management purpose, they transfer the ownership and business to the private person. And private enterprises are subjected to scrutiny and discipline. And fear of closure of finishing the efficient enterprises, less political interference, and self-interested owners. So these all are the features of privatization. Well, sorry, reasons of privatization. Scope of privatization. So ownership measures. So ownership, what happened from public enterprises, transfer of ownership from public enterprises are fully or partially to lead to the privatization. The higher proportion transfer to ownership is individually cooperative and cooperative sectors, greater degree of the privatization. Total denationalization. So it is implies the complete transfer of ownership about the public enterprises in the private hands and joint ventures. Sometimes the private introduction of private ownership in the range of private ownership depends upon the nature of enterprise, government policies. Liquidization, management buyouts. So management buyouts means what? Special version of denationalization. It implies the sale of assets to the employees. For this purpose, appropriate privatization loans from the banks also made the enable to employees to take over the ownership. Next, organization measures. So first one is what? Ownership measures. Second one is organization measures. Holding company and leasing, restructuring, operational measures. So these are the scope of privatization. So scope of privatization we classify into 2 measures, that is owner side and organizational side. Objectives of privatization. So the augment of the government resources for the other development needs, reduce the budget gap, the minimize the requirement of funds from the budget, and inevitable the capital requirement of the public enterprise to enable and accelerate the growth of diversification enterprise under the new environment, which is not constrained by the restriction normally imposed by the public management, to reduce the military and indisciplinary trade union of the some political as a support, to improve the operational efficiency of public enterprise, to develop the competitive efficiency in the industries. to generate the resources for the deficit budget, for the globalization domestic industries, to invite the foreign capital, to earn the foreign currency through the exports of promotions, to explore the natural resources, to emerge the worldwide public ownership, to create the environment for rapid industrialization, according to prioritize the welfare in active government, operate the public enterprise commercial basis. So these all are the major objectives of behind the privatization. Reasons of public sector public enterprises. Lack of importance of profit motive. See, public sector units, they failed because of lack of importance of profit motive and inappropriate location. Then, because of political interference, they established a wrong place of the plants and underutilization of installed capacity, and they whatever the capacity is there, they are not going to use the properly fully, they are not going to implement, not making the proper technical feasibilities, delay in the project completion, and absence of professional management. So our next, overstaffing and defective of recruitment promotion policies, lack of rational pricing policies, political interference. So because of this all the reasons, public sector public sector units are failed. Advantage and problems of privatization. Yeah, the lack of political interference. If you transfer to the private sector, automatically they people can operate the enterprises. So automatically what I can, the lack of political interferences will short-term views. Shareholders will increase the competition, and government will raise the revenue from the sale of the uh, units. Disadvantages: natural monopoly. So now, if you see that most of the industries are controlled by the Adani only. So that is the one of the major reason. Public interest. So reduce the public interest. Government loss out the potential dividends. So whatever the profit they will get, they will lose because of the private parties will take over that. Problems regulating the private monopolies and fragmentation of industries. Short termism of firms. So these are all the disadvantages. Forms methods of privatization. So how can we transfer? Uh, how can we change into the public sector into privatization? First one is the selling of shares selected the public sector enterprise and started sale of the public sector enterprise to private sector companies. So these are the two methods. And now methods identified by the Richard and C. Brooks. So complete privatization operations, use of contract, franchising, open competition. So these five methods they are using to transfer of ownership and control to the from public sector to private sector. You can read once. Impact of privatization on Indian economy. So when when public sector units transfer to private parties, automatically efficiency is increased. So when the more efficiency increase, the automatically it is profit for the Indian economy, and less wastage and reduce the cost. So maximum wastage they avoided and reduce the cost. So the people utilize the maximum resources and give a good output and no political interference. So if it is public sector, all the political leaders can involve and they can give the suggestions. But in this case, there is no involvement of political intervention because it is purely transferred to private parties according to their plan. They are going to implement. Is it clear? Next, flexibility decision making. Flexibility decision making, no need to wait for the government order or government decisions. The management will take quick decisions and beneficial to the customers. So private sector enterprises earn the profit. This can be achieved only the customer satisfaction. So they are going to focus on the customer benefits. So they can provide the maximum services to the customers. Responsibility and accountability. So private parties are there, whatever they are doing, they are responsible and they are for the accountable persons and capacity to raise the funds. so they can easily raise the funds. No mismatch between the production and demand. So as per requirement of demand, they can produce. What is the negative impact of privatization? Ignore the social welfare. See, public sector only they are going to concentrate on the customer benefit side and customer side only. They will not focus on the profit. They want to service based only they can. But in privatization, they won't think about the customers. The main aim is what? Earning the profit only. So they can ignore the social welfare, ignore the social welfare, unemployment and poverty. See, in public sector, as per rule, they can give the employment, but private sector, few people can work entire things and they can dominate. They can only earn the money. They are not going to provide the any employment. So these are the disadvantages. This is the privatization. Next one is what? Globalization. What is the meaning of globalization? Globalization is a literally sense of process of making transformation from something to the phenomenon to the global ones. It can be described the process of which is people world uh, unified into the signing into society to the business side together functions. So what is the meaning of globalization? Globalization means different thing to different people. Globalization has become an expansion of common usage. So unfortunately, it cannot. So simply, we can say that mm, we can say that to sum of it represent the brave new world with no barriers. See, for some other spell down its distribution of according to Deepak and Nayal, globalization can be defined as a simple expansion of economic activity across the political boundaries in Indian states. So this is the globalization. Globalization refers to free movement of goods and services people across the world. So seamless and integrated manner. Globalization can be throughout the to be result of opening of the global economy. So it is concomitant increase the trade between nations and other goods. So means globalization means simply any country can start business in any other country throughout the world. So they are not going to face the any barriers, there are any restrictions. Elements of globalization. Introducing the foreign exchange management. So introduction of Foreign Exchange Management Act, it is simply shortly called as a FEMA. FEMA. It is started in the year of 1999. Okay, reduction of customs duties. So if you want to export or if you want to import anything from other country, there is a different kind of duties are involved. So because of globalization, they reduce that custom duties. Liberalization of foreign investment. Foreign investment, see now previously FDIs are only 40% we can allow. Now it become 100%. So anybody, there is no limit. And signing of WTO agreement. So the World Trade Organizations like some of the trade related intellectual property rights, GATS, General Agreement on Trade and Services. So all the countries are they are going to enter into they will sign to the business. So that is called as a globalization. Concept of globalization already I explained. Drivers of globalization. Drivers means what? Technology drivers, political drivers, market drivers, and customer needs, cost drivers, competitive drivers. So these all are the drivers. So it means what? Technology you can adapt from the other country, and political drivers. If you have good relationship with one country to another country, then only you can move. And market drivers, the establishment of the major infrastructure facilities. So next one is what? Next one is the cost drivers. See, most of the companies they established in our India because of our our labor is very cheap. So that is nothing but a cost drivers, competitive drivers. So these all are drivers of globalization. Merits and demerits of globalization. So merits and demerits simply it is nothing but a advantages and disadvantages. So if you implemented the globalization, so most of the companies they can establish the where they are convenient. So because of that, they can increase the employment opportunities and give the education also and increase the free trade policies and faster flow of the information, increase the quality of goods and services, and decrease the price goods services, and reduction of the cultural barriers. So these all are the advantages, merits of the globalization. What is the demerits? Environmental degradation. See, most of the foreign countries they came and they started business. So they spoiled our environment. So that is also one of the major disadvantages. And unfair working conditions. See, once they start the MNC, according to their timings, we have to work out. So if you want to work according to your wish, it will not work out. So unfair working conditions. So sometimes we have to work 9 hours, sometimes you have to work 10 hours. So according to their requirement, according to their guidance. So fall in the employment growth rate. See, most of the work restricted with the few people only. So that is the reason they can fall in the unemployment growth, growing of disparity among the rich and poor. So 86% of the world resources are said to be consumed by the 20% of the population only. So remaining 80% of gets only consumed only 14% of the world resources. So those who have money, they can only utilize the entire resources. Small scale industries face the extin- extinction and the rapid spread of the delayed diseases. So these are the disadvantages. Impact of the globalization developing countries. Economic trade process. So economically it is going to be great. And education and health system it is going to be changed. And culture effect. The most of the other country people will come because of that culture also it is diluted. So these all are the different aspects of the globalization. Yeah, go through once. So next time I will explain the next black. Yeah. So this is the topics which are required to discuss in the black three. That is liberalization and privatization, globalization. So remaining topics we'll discuss in the next class. So only two blacks left. I'll discuss the next class.